Okay, cool. Here we are in episode 8, and we have a big reveal here in episode 8. Rohit Bia is going to show how much returns did he make in the last 3 years of investing. And this is a real recording of the InMoney app. So
Yeah.
here you are. Let's go, Bia. I'm also excited to see.
So yeah, this is a recording that I took from outside the phone, so nobody can claim that it is fake or AI or anything. So this is the all-time XIRR, and the 3-year XIRR is 79.22%.
Wow.
I know that from the looks of it, it feels like it is an amazing number, but
It
the
is an
last
amazing number. What are you saying?
I
It
mean,
is a phenomenal number.
the last 3 years were very bullish, and my Palantir holding had a big part to play in it. But yeah,
Yeah.
overall,
Yeah.
it's
I mean,
it's
that's what
performing
happens. I
very
mean,
well.
the great learning here is that you have to let your winners run,
Yeah,
right? And obviously, like if you're going to buy a bunch of 10, 20 stocks, it's not like everything has to perform, right?
right, right.
But the whole idea is that those 2, 3 winners from the list can outperform everything, right? They can.
True,
I mean,
true.
the math here is that your losers can go only down 100%, right, at max,
Yeah,
but your winners can go way more than 100%,
true,
right?
very
And so
true.
in the long run, investing can work out for most people. So my number is not as good as yours. I don't have a recording to show, but it's somewhere around 32, 33% XIRR. But happy with it. I've played relatively conservatively. So let's see. But what's your? I think the bigger thing that we want to discuss in 2026 is, obviously after the 2022 bear market, I think when majority of your funds went in and majority of my funds went in, when we
Yeah,
realized that this is a very good buying opportunity, right?
yeah,
And then we saw the bull run through 2020, later half of 2022, then 2023, 2024, and 2025 as well, right?
yeah.
But in 2026, I want to do some predictions. I know it will mostly fall flat, but let's do it anyways, right? Because that's the fun of it. So, what do you think about 2026? Largely, do you think it is going to be phenomenal, not so phenomenal? What's your take on it?
So the global money supply is increasing, and
Mm-hmm.
US stock markets obviously are expected to rally because they are going to cut rates further down, and then
Yeah.
uh, Trump is going to install a puppet instead of Jerome Powell.
Yeah.
So uh, basically, the money supply, like will be entering. We have already entered quantitative easing,
Yeah.
and it'll just become official in 2026.
Mm-hmm.
So ideally, stocks need to go up in value because the total money supply overall would also be increasing. But there are so many factors like geopolitical risks, be it Taiwan or if this Venezuela situation worsens or something
Mm-hmm.
else could happen. So there are overall so many risks, like the silver thing. China is restricting silver
Yeah.
going out of their
Yeah.
country, so a lot of things will can affect the markets. So I feel it will be very volatile, probably more volatile than 2025.
Mm-hmm.
But I think limited assets like stocks should go up, be it metals or stocks, limited commodities, they should go up this year.
Okay, got it. My take on 2026 is that I think generally the stock market has been following a 4-year rule. So with that aspect, and generally 2026, because it's a midterm year. What does a midterm
Yeah,
year mean in US is because of elections, right? So
yeah.
it's a midterm year, and generally midterm years have not been very bullish. That's one reason. Again, it's like a data point. It's not like a reason.
Yeah,
Doesn't mean it has happened in past. So it is, it'll happen again. But that's one data point. Second is that primarily what I think is the bull case for me, still the rational at least, is that fundamentally all of the companies are still going to show great earnings,
yeah,
right? That's the primary and the core argument that I have of why we will move even higher.
yeah,
But I think overall the market sentiment, because of this, bull run that we are coming from, I think the overall sentiment is that, everybody's too afraid right now that, maybe it's enough. How longer can we run? And that has kind of taken over the sentiment now. And now we are in, I mean, it was the sentiment in 2025 also, but now in 2026, people are like, bro, like in 2025, also we ended, higher than what we started as. So will, very low chances in terms of probability that 2026 again will also be a positive thing. So this fear has, I think, overtaken, and this sentiment will still exist in 2026. So I think that's a bigger reason of why a lot of new money is still fearful to join the market, especially the smart money, as people say. So
I'll also share a chart around
yeah.
this. Yeah, so again, like I like to do a bit of technical analysis. So I'll show trading view. It's an old setup that we have seen. This blue range is from, it started from the COVID lows, and we are again hitting the upper band. So
Right.
it is like almost 3 to 4 times we have hit it. uh, I don't know, like if we will go down from here or if we break this and go up from here. But
Yeah.
overall, whether we go down or we go up, this broad channel is still going up.
Correct.
So the markets should go up, but yeah, there might be like a lot of volatility. If something grave happens, so maybe we could fall like to the 200-day moving average,
Yeah.
which is this dotted blue line. And yeah, it won't be that big of a fall, I feel. So I think still we should focus on uh, investing in strong assets with strong fundamentals, and
Right. I think the bigger
which
thing also here at play, Rudhya, like based on when you said geopolitical risks, right?
yeah,
Basically, the fundamental argument that you're trying to make is that the looks like, or the fear is that there might be some sort of a black swan event,
yeah,
right? Which we don't know exactly what it might be,
yeah,
but there could be. But my argument is that yeah, I don't want to be timing the market, because I know that my investing style, I'll most probably lose, right? Even if I sell at the right time, I'll not be able to re-enter the market at the right time.
yeah,
So from
agreed.
my perspective, I'm okay to face that drawdown. Let's say a 10%, a 15% drawdown in S&P. I'm okay to face that. But the idea will be that if that happens, I think I'll be very happy, because that'll be an insane opportunity to buy some of the good assets,
That's true. That's true.
right?
For a disclaimer, though, I am completely out of the market right now, except like a very small portion,
Right.
because I like being a little more risky, and even though I know that ideally it's not the right way to try and time
Yeah,
the
but that's how
market,
you
but
get 75% XIRR. Otherwise, you
yeah,
don't. Right? That's
79
the
though.
risk. But yeah. No, but yeah, fair argument. I mean, I have been more empathetic to the bear arguments recently, right? And I have that sense of fear in me. It's just that I don't want to be timing the market. That's why I don't want to be selling the assets right now. But uh, I'm not going to be buying a lot of stocks into 2026 heavily. Uh, and if there is a correction, I'll for sure be a buyer. So
Yes.
that's the overall thesis. And to this thesis, and acting on this thesis, what we have done is a very interesting thing. Me and Rohit, we have created a set of portfolio of 10 stocks, right? Especially for 2026. And we have created it just 1 hour before joining this podcast, right? And we are going to leave it untouched, right? For 2026, and we'll see who comes out at the top. That's a little friendly competition that we want to have. So we'll just take you through the picks and give some rationale as to why we have picked those stocks. And then I think we can delve into some of the other geopolitical stuff later. But this is an interesting one I really like, and we'll be sharing the links in the description as well, so you guys can also track our picks. So let me just share the screen, Rudya, and show our portfolios. And I'd like you to go first. And
Yeah. So I feel like more than a competition, it also gives like an insight on what kind of thought processes going in your
True.
mind, when you're picking these companies? And I'm interested to see which companies we might have in common.
Yeah, that'll be a good year. Yeah. Okay, so I think the one on the right here, at least my right,
Yeah,
is Rohitya's portfolio. The one on the left is my portfolio.
yeah.
And awesome. Yeah, Rohitya, I'll. Why don't you take us through your portfolio?
Yeah, so till till very recently, till around a week or 10 days back, I was heavy into metals.
Hmm.
But again, the technicals seem to be very, top of the market kind of signal,
Yeah.
especially
Overbought,
especially
actually.
silver.
Yeah.
So very overbought. So like overall, I know there will be metal shortages and everything because of AI, the
Hmm.
increasing demand.
Hmm.
But I still feel that there would be like a big demand for rare earth metals.
Hmm.
So REMX, yeah, that is the 10th one. REMX is basically
REMX.
VANEG.
Okay.
Yeah, it's an ETF. It's VANEG, Rare Earth and Strategic Metals ETF.
Okay.
So it has performed well in the last year as well, and I expect it to, perform well for the next few years because of the increasing demand. And obviously, geopolitical risks will happen, but
Hmm.
I feel it's like a very important factor for this portfolio, which is slightly on the riskier side, to balance that risk.
Okay. Got it.
And then I'll go to the first one, which is ARC ARC
Yeah.
Innovations portfolio. It is called the ARC Autonomous Technology and Robotics ETF.
Right.
So I'm big on humanoid robots and stuff. I have some investment in a Hong
Hmm.
Kong China based company,
Right.
and recently it's called UBTech, and they were recently allocated contract by China to
Yeah.
place their humanoid robots on the China-Vietnam border.
Right.
So yeah, like since we wanted to keep it more US centric, so I kind of replaced that with this
Right.
ARKQ
So it's an
ETF.
ETF. It's like a basket
Yeah,
of autonomous technology and robotics
yeah,
companies.
yeah.
Got it.
So I even wanted to add Tesla to this, so
Hmm.
it takes care of that as well for me. So it's
Makes
kind
sense.
of good. Yeah.
Okay.
Then obviously like Rocket Lab, it is. So I see that 2026 SpaceX will launch an IPO, and
Yes.
what happened last year is I see it as a secondary play. Like Nvidia performed well last year in
Hmm.
2025, but
Right.
if you see performance wise, AMD
Yeah.
performed
Outperformed
like
Nvidia. Yeah.
or outperformed by a lot. I think
Yeah.
almost 2 to 3 times it
True.
outperformed. So I'm seeing like a very similar trajectory for Rocket Labs, and yeah, like hoping that it'll give quite good returns. It's a riskier stock, but yeah,
Yeah. But
recently,
don't you think
yeah,
Rocket Lab has already run a lot? I mean, based on their revenue, their stock price is just rocketed. Yeah.
it has, but even then, I feel like it can double because uh, the race to launch satellites and the race to send these data servers and stuff to the space
Yeah.
is just starting off, and it'll heat up a lot in 2026,
Got it.
plus SpaceX. So all these factors combined, I'm anticipating at least like a doubling of price in this year.
Okay. Okay. Cool. Then we have what if?
Then I think, yeah, like whatever we have already covered a lot of these AI sort of AI centric plays, like let's say what if or ASML.
Right.
Um I'll cover more things in more detail, like let's say NU, which is
Yeah.
new holdings. So
Hmm.
it's like in the fintech space, and it is like a digital banking platform, and they're in the US, but they're expanding rapidly in South America, in Latin
Hmm.
America, and
Right.
I like I've the fundamentals are good, and there was one more Mercado Libre which I was considering, but
Right.
then I felt that this one had like better fundamentals,
And
and
generally, banks are a good play in a low interest rate environment.
for sure,
Yeah,
that too. And yeah, like this is also sort of a defensive stock for me for this year,
got
for
it.
this portfolio as well, because it's very risky otherwise.
Okay.
Then Beam again. Beam. I think we have covered it, but yeah, like I'll quickly tell
Yeah,
a
just
couple
two
of
lines.
lines.
Yeah, your
Yeah,
hypothesis around.
Beam Therapeutics. It's uh, again, it's into the biotechnology field, and they are in the field of gene therapies and
Okay.
like editing of genome.
Okay.
So first of all, it's like a red hot stock right now.
Hmm.
It has doubled, I think, in the last 1 year or so.
Hmm.
And then yeah, like it is currently very hot. Plus, this thing is, it's gaining traction. Like this whole sector,
Hmm.
biotech and pharmaceuticals and stuff.
Right.
So I think it should be a good play for 2026.
Okay. Understood.
Then similar Viking Therapeutics, again a biotech company, and they are making treatments for treatment of metabolic and endocrine disorders like obesity. They're in the works for a drug on obesity.
Okay.
And like this again, I feel that there were 3 4 stocks that I was considering for this space.
Hmm.
I feel it has slightly better fundamentals than some of the other plays, and
Okay.
can be like a very
Hmm.
good can give good returns for this year, especially when there is so much focus on obesity related drugs, right? Some
Correct.
new oral drugs are coming up, so
Yeah.
yeah, I think this can
Yeah,
be
I
very
think
good.
Eli Lilly and other companies also have recently gotten
Yeah,
approvals on oral drugs for obesity.
yeah. Then next is Centrus Energy, LEU.
Yeah.
So it is into refinement of nuclear fuel. So
Mm.
it takes nuclear fuel and like it gives a refined products to power plants. And this again is like a play for the AI part.
Mm.
Like I feel nuclear energy should start getting more and more traction as the demand for energy increases. And oil again, yeah, oil, this Venezuela thing might play a spoil sport in this, but I still feel that they can't keep relying on oil for like coming
Yeah.
decades.
Yeah.
So
And that
I think
oil cannot be immediately used because it's not like basically, I mean, they still need power
it's
grids and other kind of stuff to set up like
yeah,
infra to be developed to be able to use that oil to produce energy.
yeah. And
But
the
in,
Venezuelan oil is apparently like even more hard to refine.
yeah, yeah,
So
yeah,
it's
yeah,
some hard petroleum or something. Don't remember the term, but yeah.
correct.
So
Cool. So I think overall you've tried to be aggressive, but also have some stocks, that if
yeah,
we see a downturn, it'll kind of protect you.
yeah. And the last one, I think I'll just quickly cover. UEC, it's
Hmm.
Uranium Energy Corp. So
Yes.
that again, it's uranium production and exploration company. So
Okay.
a little heavy on
Is it a
nuclear.
ETF or it's like a
It's a stock.
okay, okay.
Yeah. So yeah, I
So they
think
have their own uranium reserves or something like that.
yeah, and they keep exploring for looking for new
Okay.
ones.
Awesome.
So yeah,
Awesome. Yeah. So I think I'll just quickly go over my picks. Uh, so starting with, I'm as you can very clearly see that I'm still kind of heavy on Mag 7
yeah,
because I feel that they'll still win in 2026 because they have most cash to spend on data centers, and till now at least looks like the person who can spend more and buy the most GPUs kind
yeah,
of wins in distribution, and I think the market is going to reward them for that.
yeah,
So based on that thesis, I think Google becomes very obvious. I know everybody thinks it's it's perfectly priced right now and it has gotten 100% run up, but I think in 2026 we'll see Google monetizing AI. We have
yeah,
still not seen Google monetize AI, and I think once they start doing that, we'll see a lot of premium for that. Second thing is that I think we'll see an acceleration in Waymo. uh,
yeah,
like earlier they used to add, let's say 6 cities every quarter.
yeah,
Now they are doing it way faster because they figured out this model. So I think we are going to see that acceleration in Waymo as well, and that revenue is also might not be considerable with respect to Google's overall revenue, but I think the market will start giving them premium for that. So that's the Google thesis.
It was very hard for me to keep it out of these 10.
Yeah, I mean, yeah, when I actually picked 10, and we discussed that we have to pick only 10, suddenly became very difficult because now it has to, like, it's like, you have to, if you're good, it's not enough for you to get on the list, right? You have to be there's to be something exceptional about it.
Yeah.
So Nvidia, very obvious name, but the whole idea, I feel that the overall fear that just because this company is around 4.5 trillion, I think that's a big logic that everybody has discarded this stock. But I feel if you just look at the numbers, I think they're going to make way more revenue in the next 3 years than $500 billion that Jensen has already said that he has visibility on. It still does not take care of the China deal and Anthropic deal and a lot of things that happened after he claimed that. And there are even the new chip that they have is supposed to be 10x better than the current chip that they have.
Yeah, and for that you'll need VRT.
And for that, you'll need VRT. Yes, that's yeah.
Cool.
So yeah, coming to VRT, actually, so I picked AIPO. AIPO is like an ETF on power and energy stocks. So it has some of the energy plays. It has VRT as well. So I did not want to bet on a single company, but overall, the idea is that these data centers. We talk about nuclear and all of that, but unfortunately, it can't be built in a year or two, right? It will take time for US to build these nuclear power plants, but all of the companies that have grids in place today, let's say Constellation Energy, etc., they can definitely raise their prices immediately, and I think they'll have that pricing power in 2026. So AIPO is my play on the energy thing here. And coming to the energy thing, I have Bloom Energy. Bloom Energy is like a moonshot bet. Either the stock will double or maybe even higher, or this could just bomb as well. But Bloom Energies again is the only company that's a very logical alternative for data centers today. Basically, they make some like Bloom boxes. Basically some energy chemical reaction that they figured around hydrogen, which produces insane amounts of energy through those Bloom boxes. It's obviously expensive, but it's a one-time setup and gives uninterrupted energy, which is very important for data centers.
On this, like in the same place as the data center, so they are generating that energy right there. I think that is their
exactly. And this becomes a very good play for data centers, because one of the problems that data centers are facing is that they can be reliant on the grid, is because when let's say a company like Constellation Energy raises the price, everybody in the locality also has to pay that price, for per unit electricity. With Bloom Energy, your entire data center can have an isolated energy source, right? So that's the bet, and it's not a tech like Oklo that it will come in the future and all. They have already figured out the tech. They already have the supply chain. They are already delivering. I think in 2026 we are going to see some insane partnerships with Bloom Energy. Currently, the stock has seen a beat down because of their biggest partner being Oracle, but I think we'll see some good deals in 2026, and that will give the stock a run. And then again, we have TSMC. You have to pay the TSMC tax. Every time I keep hearing the news that people are just fighting with each other to take the TSMC bandwidth to package their chips. So it's a no-brainer, high quality stock. The forward PE is still around 25, so I think it's gonna do well in 2026 as well. Meta, I think it's undervalued right now, considering that all of the other hyperscalers are still supposed to see returns on their AI spending. Meta is already doing that. They are already saying that their ads are performing way better. The watch time on Reels is way better. And I think they will be able to pull this lever a lot better in 2026. And the PE on Meta is around, I think, or 22, 23 right now. So it becomes a no-brainer. Netflix, the only reason being, I think the deal will happen, and they'll be able to own Warner Brothers in 2026. And obviously, it will be a big hit to their balance sheet, but I think it will then conclusively, uh, you know, create them as a really big deal in the content generation system, where it'll be very difficult to beat this company. And I was just looking at some technical data on Netflix. They are at their 100 weekly moving average, and historically they have rebound from that. So it's at a good price. It's at a same price when Trump in 2025, I think, when he announced the Liberation Day tax on other countries. So when everything fell, right now Netflix is at that price.
Okay.
So for that reason, I think Netflix is a buy. Uh, GE is basically a aerospace company where it manufactures engines for companies like Boeing and Airbus. It's kind of a monopoly. I think there's just one other company that does it. So it's just a defensive stock for me. If we see the AI play not working out, then it's not like, so the flights are still going to be made. So it's just a defensive play in that area for me. Same with SBGI. SBGI, as we have discussed in our previous podcast, it's the company behind S&P 500, and they do debt ratings like Moody's on a lot of debt. Which I think in the lower debt environment, a lot of big companies will go for that option, especially because they need data centers to be constructed. And I think that's all. And cash is zero, which is same as you, Rodya. So I think overall, largely, we still feel that stocks are a better choice overall than cash.
Some of these comparisons, when you see both the portfolios, are very interesting. Like you decided to pick TSM, I decided to pick ASML.
Yeah,
So both are like, there's
both
no
are
such
really good. Yeah,
competition for them, and they are like essential. Like ASML builds the machine which TSM then uses to create the chips, and like no other company is basically able to beat that or
right.
replicate that. So there are some commonalities, but for some reason there's no common stock. But I would say there are like common sectors, and
Yeah, but the thing
obviously,
is, I think you have also bet on the energy. They're just different bets. I've also bet on energy. You have different bets in the AI data center play. I have slightly different plays, and I think both of us have also tried to add some stocks, as a hedge.
yeah,
Uh, if the AI thing does not play out, then it should not be all stocks going down at the same time. So it'll be interesting to track this, throughout 2026.
yeah,
Yeah. We'll be adding the links in the description. Um, so largely, I think there's a lot also happened since last time we did our podcast. I think obviously, one thing I wanted to discuss about is that insane run up that silver has had.
yeah,
And the primary reason, at least the news that I could catch, was that China has banned or limited the exports of silver.
yeah.
So that has suddenly, reduced the supply. And I was just looking at some videos in China that, people are just taking their silver bars and, selling them. So some sort of a FOMO scenario in China.
That's crazy. I'll just quickly share a trading view chart on silver. So, uh, like if you see this bar right here,
Okay.
it has almost engulfed the previous one. So when
Mm,
this kind of a bar comes, it is generally very bearish.
right.
For some reason, again, it happened again here.
Mm,
So after this, I don't think like in the very very short term, like in the next week or couple of weeks,
mm,
silver might not be able to break this level where it is at right now, or like $80. It should not be
right.
able to beat. But yeah, let's see. Like there are so many geopolitical risks and this China factor. We never know what will happen. Also, I read somewhere that even Venezuela is rich in silver. So I don't
Gold.
know
I
how.
think gold, yeah, they have
Gold
insane
is it?
amounts of gold.
Okay, gold and
Is
silver.
another reason why Trump is obviously very interested in the country. So for folks who don't know, over the last week, I think over the last week, right? I think on Sunday. Yeah, I think on Sunday.
Yeah,
Or
couple of
last
days
few
ago.
days, America, just everybody woke up to the news that I thought it's some sort of a, like, I could not believe at the start, like, how can you just enter a
Felt like a
country and,
dream.
pick the president of the country and then come back and, like, their defense systems did not work. And, I don't know, man, like, very embarrassing for the country.
Felt like a joke.
And they had all of their defense systems were Russian. I hope our defense systems are better. Because one fine day, if America realizes that got to pick the prime minister or the president of the country, they can just do so, and nobody can do anything.
We have a combination defense system, so wouldn't be an issue.
Yeah, I really hope so. I mean, more than irritating, and I think it's very embarrassing for the country.
Yeah,
Like,
for sure.
like obviously, I don't know much about, obviously, it seems like people of Venezuela are happy and stuff like that, because he was some sort of a dictator and the country was not doing well for the past 25 years. But I don't know much about that. But overall, just the fact that, these guys can just enter at 2 a.m. in the country and, just pick the
Yeah.
president. It's like, wow.
And
Insane.
they even had like a lot of Cuban forces there. So I think like more than 30 Cubans were also killed.
Oh, okay.
So it's like a huge thing, right? Venezuela in itself is a big country. Obviously, like the ruler was, ruler, not ideally. We shouldn't ideally call him a president. So there are obviously bad things which
Right.
should have been fixed, but I don't think what was done was fair either. So it's a very tricky situation, and
Yeah, yeah.
the opposition leader won the Nobel Peace Prize. So obviously, like she'll come into power now, and
Yeah, I think so. The bigger thing here is that, how the markets is kind of affected by this. So I think the biggest oil companies that are public, like Chevron, etc., I think they have seen a run up based on this news. Just for people who don't know, so Venezuela has the biggest oil reserves in the country, like more
in
than
the world,
Saudi
yeah.
Arabia and more than US, obviously, and stuff like that. So that's one big reason. And Trump has. I find it very funny when this guy says, so he said that, he's trying to justify that why US has, why we'll exploit their oil reserves is because, when apparently there were allegations that Venezuela was supplying drugs to a lot of, or sending drugs to USA. So they got to compensate for all of this. Right. So anyways, so that's one big reason. So I think energy overall, at least, maybe it cannot be translated as we have discussed into energy today, but the overall sentiment of that oil is no more a problem for US is gonna create a bullish stance, is what I feel. But obviously hoping that it does not spiral into geopolitical event, then only these things are possible. But yeah, I am on the side of none of this should be happening. Like obviously there are better ways to deal with all of this. But anyways, we'll see how things unfold.
So yeah, I think we had a great episode today. A lot
Yeah,
of
I think it's a lovely
stories
episode, and I'm very excited to see our portfolios.
at the end of the year.
Yeah, at the end of the year. I mean, we'll keep tracking it in our different episodes, or at
Yeah,
least we'll track it once in every episode just to see where we are. And yeah, awesome. And catch you in the next one, Via.